To talk more about this story, we're going to go to London to speak to Telegraph columnist and also the author of Substack, When the Facts Change. That's Liam Halligan. Liam, thanks for joining us. First of all, Warner Brothers rejected this huge $108 billion offer. But why?
It's a huge story. Warner Brothers, of course, Hollywood royalty, been around since the early 20s, an incredible range of IP at their disposal, everything from Harry Potter to Casablanca, the old Hanna-Barbera cartoons, Bug Bunny, Scooby-Doo, all the way through to Game of Thrones. So why have Warner Brothers rejected Paramount Skydance's offer of $108 billion for their company and accepted Netflix offer that's closer to $80 billion. The difference is $30 a share, that hostile bid from Paramount Skydance, compared to $27.75 per share from Netflix. The main reason is credibility, Jono. The Paramount offer is for more, but there are worrying concerns on the Warner Brothers board about whether or not Paramount can actually raise that money. Paramount's whole value on the stock market, the so-called market capitalization, is only about $15 billion. So they're trying to eat a $108 billion monster. Warner Brothers, which includes, of course, Discovery and HBO after their consolidation, and their own value, Paramount Skydance's own value, is only $15 billion. Netflix, the competitor, on the other hand, yes, they're offering less, but Netflix is a $400 billion market capitalization company. The financing is secure. Netflix can pretty much finance it itself. The Paramount offer for Warner Brothers, on the contrary, as you probably know, Jono, has been partly reliant on financing from affinity partners. That's the private equity vehicle of Jared Kushner, of course, who is obviously Donald Trump's son-in-law. Jared Kushner has said recently he's withdrawing his funding, he's withdrawing his backing for that Paramount bid, for that takeover of Warner Brothers by Paramount Skydance. And that leaves what the board at Warner Brothers refers to as execution risk. If they go for the Warner Brothers offer $30 a share, if they go for the Paramount offer of $30 a share, can Paramount Skydance actually raise the cash? Netflix clearly can, and it seems this grand old name of Hollywood, Warner Brothers, is going for the Netflix streaming giant, and this points, I think, to a pattern of much more consolidation by the massive tech streamers across the entertainment industry.
So Liam, now that's where it fell down. That's why it's not happening. Is it likely that Warner Brothers could come back with an even bigger offer? Is it likely Jared Kushner could come back on board again and then kind of bankroll it to success? Or financially, are Warner Brothers kind of out of the game now? They can't go any higher than this.
Are Paramount Skydance out of the game in the bid for Warner Brothers? Well, you may know a bit more about that than me, Jono, because, of course, Affinity is at least partly funded by a Saudi sovereign wealth fund, which, of course, is close to where you are. But I have to say, without casting any aspersions on any of the parties, and all the companies involved here are enormous companies with viable economic futures, I don't think, when it comes down to it, Netflix are going to lose. They've just got too much value in their corner. I mean, look, Netflix, as I said, they're worth $400 billion. That's far more than the company that they're trying to take over and consume. That is Warner Brothers Skydance. I think Paramount, given that they've only got a $15 billion balance sheet themselves, of course, being a legacy media company, I just don't think they can compete with Netflix unless Affinity came in, and I've no reason to know whether this is true, but you've asked me a hypothetical, unless Affinity came in with an absolute slam dunk cash offer that not only consumed Paramount Skydance, but also their large debts. They've got, you know, a lot of debt on the balance sheet, probably about $30 to $35 billion. It's a bit hard to tell for sure. But unless there's just a huge amount of money dropping from the sky under the heading of Affinity or another credible vehicle that can execute this deal on behalf of Paramount Skydance for Warner Brothers, then it would be my opinion, from where I'm sitting at least, that Netflix are going to win this. And this really carries on the big pattern that we've seen of consolidation across the media industry in general and entertainment in particular.
Liam, talk to us about that for a second, the big media consolidation, because now we're going to see Netflix pretty much have the lion's share of the pie here. It's a phenomenal amount of media which they will be in control of. Is that a concern at all?
Yeah, Netflix will control, if they do take over Warner Brothers. Obviously, Warner Brothers bought HBO, Warner Brothers bought Discovery. Skydance, on the other hand, acquired Paramount earlier this year. So there are consolidated entities involved in all parts of this kind of love triangle, if you like, between Warner Brothers, Skydance, Warner Brothers and Paramount Skydance, and also Netflix. Though maybe love triangle is the wrong phrase, given that this was a hostile takeover bid for Warner Brothers by Paramount Skydance, of course. We saw Amazon acquire MGM. I think that was back in 2021. Disney acquired Fox, of course, back in 2019. And in 2022, Warner Brothers themselves took on Discovery. A big question now is if this will spark antitrust concerns. What do I mean by antitrust concerns? That's a kind of old-fashioned phrase for when regulatory authorities, in this case, almost certainly the US government, if indeed they do act, think that a particular company has too much market share and they could end up abusing consumers and really thwarting healthy competition because of that market share. It doesn't seem to me that that's going to happen, Jono, if I'm honest. I think most people involved in this deal, putting up big money and publicly going over the parapet, as it were, putting their reputations on the line in a global context with the likes of you and me discussing it on live television, I think they'll have got the regulatory nod. I don't think the president's son-in-law would have got involved to this point unless he had had the regulatory nod. Or it may be, and this is an outside thought, it may be that that's the reason why he withdrew his money, Affinity's money, from that Paramount Skydance bid for Warner Brothers. It's all pretty opaque, but I think what it means for consumers, the people who love watching film, who love watching all kinds of entertainment on the streaming services, the streamers are going to get bigger, they are going to get more powerful, and in the end, they're going to have gobbled up all of the legacy media companies, the grand old names of Hollywood and elsewhere, not least Warner Brothers among them.
It's very quickly, as I'm out of time, Liam, but yes or no, will the shareholders side with the management decision on this and vote in their favour in spring or summer?
On the current information, Jono, yes, I think they will, because it's all about execution risk. And that withdrawal of Jared Kushner from the Paramount Skydance corner of this ring, and it has been a contest, that really resonated across financial markets. The Warner Brothers board are saying there's too much execution risk with the Paramount Skydance offer. Netflix is a thoroughbred, and guess what? Its market cap is 26 times bigger than that of Paramount Skydance. And in the end, money talks, and in the end, that's why I believe Netflix will win.
Liam, there I'm going to leave it. Thank you so much. Telegraph columnist and also author of the Substack When the Facts Change, Liam Halligan. Appreciate it.